It's that time of the quarter again. We've got Q3 2024 earnings coming out in just a week on Monday, November 4th after market close. So we'll go over the earnings preview from last quarter's results in the presentation and what at least I'm looking forward to for Q3. So starting with GAAP net income first, Palantir is on a roll and they achieved their seventh consecutive quarter of GAAP profitability. It should be no surprise by now for them to achieve their eighth quarter, and there are no warning signs, of course, that they've shown of them missing this. As you can see from the last six, this has been continually increasing, and this trend is something I would expect them to continue as well. Now, it's not necessarily a make or break or my highest priority, but keeping that margin of safety is crucial for them to ensure their S&P inclusion is not put at risk in the future. But other than that, that's pretty much what matters when it comes to GAAP profitability, in my opinion, for at least the current stage of the company. And then briefly, along the same lines is the same sentiment for GAAP operating profit. This shows how the business is able to actually make money without relying necessarily on other factors that make it to the bottom line, like say interest. Expansion of this margin of safety, though, is still the same thing as above that we're looking for here. Next is a more recent metric that they've started sharing more. They've been tracking and sharing this on the presentation now, Rule of 40. Now, as the name suggests, 40% is actually the goal here for SaaS companies, so them continuing to expand this, at least from the last four quarters, show this is a healthy uptick for Palantir. And this is a SaaS metric, of course, to show the sustainability of one's business, and it's a combination of the year-over-year revenue growth plus the adjusted operating margin. And clearly, both metrics have been trending upwards in the right direction, and of course, they're proud to show this off now, so we'll see if they will keep including this. Now, the big kahunas, revenue growth. Now, first, the separated segments of commercial revenue growth and the US side broken out. Obviously, US commercial is the bread and butter right now for the company, and this has been touted as the brightest spot for them by management. And we've also been seeing this in their PRs and events and deals being signed in general. And where Palantir is plain as day is that this is the main focus of the company, so it shouldn't be a surprise this is where the growth is. And I'm all for it, considering if that's where the traction is, then they should just go all in this area while the iron is hot. And this is part of their views that the way US businesses are really after making things work, even if they got to work with new technology and figure it out along the way and build it. But regardless, 33% for overall commercial is still really healthy for their business and shows how their business has become much less reliant on the government segment, at least growth-wise. Now, government revenue was actually the unexpected growth driver here, and I think that's just a bonus in my opinion. And this lumpiness has been seen all over the quarters we've covered on the channel, jumping around from, say, the teens to the 20% as we've seen now. And the interesting point here is that the US government revenue grew 24%, while overall grew at 23%, meaning that international, at least rate-wise, grew closely to the US counterpart. Now, obviously, US government is a way bigger part of the pie here at $278 million, but at least in comparison to commercial, we'll see if this trend can continue or if the lumpiness does come back and we see either stagnation or a lower rate of growth for Q3. So combining both segments, we got a total revenue growth of 27%. This is an acceleration from previous quarters, and I believe this is the biggest factor for markets turning a much more positive opinion on the stock. Because yeah, you can argue it's not the 30% hinted at years ago, but after pivoting and showcasing the performance of AIP working for their business, getting back to the high 20% range was already something people didn't expect and would happen for a while. Now, the other part of the story is though that when Q3 comes out, will we continue to trend upwards and meet or exceed 27%? We'll get to this when we cover guidance, but basically Palantir's management from recent quarters have exceeded the expectations that they've set. Then the other big numbers to look out for are commercial customer counts. So looking at US commercial first, which is the one they mainly want to draw attention to, 83% year-over-year growth in the numbers of US commercial customers is huge. Obviously, revenue hasn't grown as fast as this, but really the name of the game when it comes to software is getting the bodies in and continue to show value to where they not only want to, but need to expand their usage of Palantir's products. This creates a value proposition when contract renewals come around to where the negotiation table definitely favors Palantir. And it's not like they're strong arming them. It's more like they're just so valuable and useful to these customers that they can go back to their leadership and justify the ROI when utilizing Palantir. And this also reflects in the general customer count and commercial customer count, both showing strong numbers of growth over the last year. It's important though to distinguish that these numbers get bigger, the sequential growth rates are technically harder to grow since the baseline goes up. But I'll be interested to see them try to reaccelerate this and hit that inflection point of ballooning this number, because in theory, the customer count should be the predecessor to growth before it actually hits the revenue metric. And then another awesome slide to note is that Palantir is a $1 million deal machine, where last quarter they closed 96 deals of at least $1 million. And then they did 33 of $5 million and 27 of at least $10 million. Note these are deals signed, so it doesn't necessarily mean these dollars will be recognized within a year, but still, to commit these 7 or even 8 figures over whatever specified number of years is something hard to do for any business in general, unless you actually have a working product and demonstrated why it's worth it for these customers to commit so heavily. So pretty obviously, we just want to see even bigger numbers for Q3, where some can argue the first number is the most important because these are the more likely newer, smaller customers and can show the scalability of Palantir getting into smaller enterprises. And then Palantir's cash position of $4 billion with a lot of this sitting in treasuries shows just how much of a safety net that they still have. Now, I think as interest rates may come down over time, management may get a little bit more motivated to utilize this cash to drive growth. But if they don't need to throw money at something that will grow regardless, then I'm all for accumulating cash. The flexibility is important, and at least in the near future, I wouldn't expect them to deviate from accumulating cash when Q3 comes out, so as long as this number stays stable. I think the ratio of how much is in treasuries will be a much more indicative point here of what management's forecast is on what they want to do with the cash in the near future. Now, guidance-wise, as alluded to when talking about revenue, is for Q3 between $697 million to $701 million. Now, at the high end of things, when compared to Q3 of 2023, if they actually achieve $701 million, that would be around a 25 or 26% growth rate. Now, if they hit this exactly, I don't think the market will necessarily hurt them and hate it, but it won't be as awesome as actually exceeding the 27% that they just demonstrated for Q2 2024. But another important factor is what management did in the past. For Q2, they actually only guided for a 22% revenue growth, but had that 27% far exceeded. So I'm really inclined to say management is sandbagging and playing it safe. But really, we won't know until they release the results. And then for full year guidance of 2024, I really just care to see them maintain or increase this. We already know Palantir is richly valued, and them beating their full year 2024 guidance by a few percentage points isn't necessarily going to make or break the narrative, as long as they don't see a need to revise downwards to where things are not going as well as expected. But at least from the clues around positivity being shared by management, something so negative is not expected by me to happen. So with Q3 earnings in a week, honestly with Palantir trading where they are today, I think the name of the game is continuing to show everyone that they are on track to grow. No one is expecting them to pull out a huge over 30% revenue growth quarter yet, but obviously that would be a pleasant surprise if that were to happen. The big factor here is that are customers still signing up, and are we seeing their customer counts continue to grow and possibly accelerate, even if revenue is lagging a bit here? I think the patience is still waiting in the market. And is guidance provided from management staying on track or revised upwards? If we see any inkling of uncertainty or unexpected curveballs to acquiring customers, then that would probably be, in my opinion, the greatest headwind to overcome. So it's quite an exciting time to be a Palantir shareholder. We're priced for perfection and growth and execution. Now it's time to prove that we're on track to actually do this or even exceed expectations. But what are your thoughts though below? And I'll see you in the next video.